All right, ladies and gentlemen, thanks so much for joining for another This Week in Crypto here on January 21st. It's been one hell of a ride this past week for those of you who are on the bull side of things, which are most of you. It hasn't been too pleasant to watch markets drop down the way they have. Not our bloodiest week for years or anything, but certainly a top five poor week since we had Black Thursday back in March of 2020. And with that, there's going to be quite a bit to uncover here beyond just price returns, which we're looking at here. We'll go over Bitcoin's market health, take some altcoin requests to try to identify which of the projects you guys have your eyes on have the best and most encouraging metrics that can indicate that there's some buy the dip opportunities. And of course, whether we actually should be in buy the dip mode right now. Oftentimes when it gets this bad and there's a 2+ month sustained downtrend like we're in now, a lot of people think that it's really just a matter of wait and see, and you shouldn't catch the knife, as they put it. But with fundamentals being as available as they are, it's no longer just a matter of watching a long red candle and randomly deciding when it's time to just put your money back in. We have metrics on our side, and that's what we're going to take advantage of today, looking at on-chain health, looking at social metrics, and trying to unravel as much as we can in this hour to hour and 15 minutes that we're going to share together. So thanks all for joining. And we will kick it off here by looking at our screener. Of course, remember that when we do get into everything, nothing we do is investment advice. It is always intended to be educational and indicate to you all what we typically have seen when the markets are sitting in the spot that they're in right now, according to the on-chain and social metrics. So just keep that in mind. And that said, what we're looking at right now is our screener. Anyone who has Sandbase Pro or even free Santiment accounts can simply go here to the screener section and you'll see exactly what I'm seeing. I sorted by descending market cap, which shows me give or take the top 100 assets in crypto according to market cap size. And you'll see that the vast majority of these projects lost double-digit percentages in price over the past week. That's obviously significant and not something we've seen a lot, especially throughout 2020, post Black Thursday, and 2021. It was mostly a sea of green, and we can only see 3 projects here in the top 100 or so that were in the positive range. This, of course, was a stable coin, so that wouldn't even really count. This is also a stable coin. So the only true positive returning project was BitTorrent, going up about 3.8%. Everything else universally in the negative in the top 100. Bitcoin has visited below 40K for the first time since mid-August. So we're talking 5.5 months is the length of time we've waited since the last time we were in the 30Ks. It's currently sitting at about 38.7. Many people who have been waiting for prices to cool down ever since that 68.7K all-time high in mid-November, you finally got your wish. We are in those 30K levels. Some people now are calling for 30K. Some are calling for below that. Others are saying that we probably won't stay in the 30Ks for very long and should bounce right back up. Friday is traditionally a very volatile day, and historically in recent times it's been a more bullish day than most other days of the week, so keep that in mind. If we do see a short bounce or a bounce, note that there is a Friday effect, so it could be short-lived or it could be the start of rebounding after shaking out a lot of the weak hands. So 38.7 is where we're at for Bitcoin. Ethereum has dropped down to 2,800. It hasn't been below 3,000 in quite some time. I think it briefly did a few weeks ago, but I can't say for certain. I don't remember exactly when, but it hasn't been 5.5 months like Bitcoin's big drop below 40K. Other notable assets that dropped a ton were Harmony at 31.7%, Loopring at negative 35%, and Kadena, if I'm pronouncing that correct, at negative 31%. Max, if you're listening, do me a favor and let Maxim into the room. It looks like he's trying to get in right now.
No, I'm here. I just
okay,
wasn't
perfect.
sure. I think we didn't share YouTube link.
Let me check really quick. It is on our Twitter. If anyone can correct me if I'm wrong, I put it up about 5 minutes before the call started. If not, I will jump and just do that really quick while we're live. In the meantime, let me show what our team put out yesterday. We talked a little bit about how sentiment is currently affecting Bitcoin's price right now and trying to figure out whether it was correlation or causation. We're highlighting here the sustained length of time that the crowd has been negatively perceiving Bitcoin. This is known as our weighted sentiment metric, which essentially multiplies the amount of social volume that Bitcoin is seeing and combines that with the ratio of positive versus negative commentary toward Bitcoin. And we can see that for a full month or so now, it's been almost all negative, other than this very small blip in the radar where we turned positive and people were becoming a little more optimistic for reasons kind of unknown, because things were kind of dropping at that time and there wasn't any clear reason. But typically when we see this long sustained effort in kind of pushing the price down, or at least speculating that the price will go down, there's generally some relief at some point. At least we saw back in September, after about a month then of mostly negative comments combined with three different waves, or two different waves, I should say, of going back positive. On that third time, that was where we jumped back up. Right now, one can argue this is kind of the second wave that we're in right now, because we never went positive up until just last week, and now we're back in negative territory. So that being said, this article speculates that there may be one more wave down to really shake out the last of the weak hands and have, that the crowd, more than we've seen in a long time, kind of universally agree that crypto's dead. We're about to go into another cold winter. Quote unquote winter is not to be used literally, but long story short is we are kind of in a fearful range right now, but these waves often come in three. And I'll look at even the current time now, since that was posted yesterday, just to give you guys the most up-to-date look at this. And this is, of course, an incomplete day, so it isn't quite this negative right now, but we can still expect that we're in this area right now. And that being said, what we'd want to see is one more wave up and then back down to indicate that we've completed that three-wave step that we saw back here in September. I can even go back to the last year, because there was something similar that happened in May. So after the big drop in May, we had this first one. We had a second one here where we went positive, and then one long third one here. And on this last positive one, this was kind of the indication that it was time to go back up. It's not always this clear. And of course, if you're just waiting for three waves every time, you could end up sitting on the sidelines and waiting as prices just skyrocket. But if history shows us anything, there's usually a three-wave process, and that's just something to keep in mind. And where we're at now, after a very long stretch of negativity that lasted about 4 weeks, I wouldn't be surprised if we kind of jumped back up once we do finally go back positive and just stay there for a while. But all things considered, there is usually one or two more cycles of this before we officially go back up. And Maxim, if you do want to give your take on this, because I know that this weighted sentiment is particularly fascinated to you, I'd love to hear what you are seeing on this chart.
Yeah. Thank you. Yeah, we wrote this piece yesterday as we saw the market and spent some time looking what were the conditions the previous 2 times. So this is a lot. Yeah. And let me share one more.
Do you want to share your screen or just drop me a link?
Yeah. No, yeah, exactly. I'm trying. This one. Okay. So and then good. And what this on this screen is our same topic, just look differently. Yeah, look, you see my screen, yeah?
Yep.
Okay. So what we are analyzing here, how much a talk or social traffic dedicated to buy the dips. Query simple, buy or bot depot dips. And we've been waiting for the pattern we are seeing now. Finally, it's quite clear that, you know, when majority is expecting something that never happens, only when they give up. The first cluster of buy the dips around December, it was very high. When we say no way, it's the final dip. Second one was already lower, so was again there is a chance. And now when we see again even lower amount of social traffic dedicated or conversation to buy the dips, and many of them are now negative if you read really in details, and still price is lower. And this is general setup you're always looking for in crypto. In this particular case, price keeps going in the same direction when it's lower, yet the metric talks and discussion about the dips is not increasing but decreasing. So, and it's 3 times. Yeah, I mean, like it's again the same 3 spikes. It can take maybe 3 months, 6 months. We'll see it more clearly.
Yeah. So Maxim, you actually beat me to it. I was going to show this buy the dip chart next.
Oh, okay.
Perfect. Okay. No, that's great. And I ask you, you know, with our rule of 3 waves that I was just showing on the weighted sentiment side, do you see kind of a similar 3-wave pattern in the buy the dip kind of
yes.
cycles?
Now it's a short wave. Sometimes they're shorter on my like back in September. There were like 2 big spikes you see in my screen, 7th of September, then 20th of September. The last one was obviously, I remember the bottom came here, 28. Yet the search for buy the dip was almost non-existent compared to the previous one. Now we have similar but more stretched in the time. As you can see, from November till middle of December, the search for the dip was increasing. Yeah, this is where you can say desire was strong. And at the same time, now, so when we have one layer of reality, you know, okay, search for dip is lower, price going lower, we might be indeed close to or the bottom. This price level, where the maximum point of pain was accumulated. Yeah, so it's here. Let's see. Yeah, it's 53, around 50K for Bitcoin. That will be the first very strong resistance. Yeah, price will push relatively easily. We will come back to, just let me make sure I'm not saying the wrong story. Because on this chart, it's not the most convenient way to spot the price, but I think it was around 50,000.
Right. So yeah, just below like 48, I think.
Yeah. Up to 48, there will be easy ride, and it's relatively easy money. The resistance at 50 will be very strong. Yeah. And that was support, strong support, and hope. And we hovered around this level quite some time, 45 to 50. And now once it turns resistance, it will be strong resistance. So whenever you enter position, if you are more actively trading, expect to leave your longs 48 and maybe then re-enter. So it gives you like 2 pieces of information. We are close to the bottom, or maybe it is. But resistance will come very strong at 50. 45 even. I would even say 45 will be already very tricky to pierce through. So these 2 things I wanted to share. There is another one, maybe we'll come back later, I need to bring this chart layout again. We noticed very interesting pattern in stablecoin behavior, also like buying the dips, but I will prepare the chart layout. I will share later on. You can take over now, Brian.
Perfect. Yeah, thanks so much for sharing, Max. It's pretty clear that we're on our third wave of buy the dip mentions right now. And with that said, at least in my experience, within that final wave, look for the social volume to start to dwindle a little bit as prices either stay stagnant or dip down a little bit further. And when it's really starting to dwindle down to that kind of base level that things have been on, that's the time when we're going to finally see a little bit of relief for those who have been kind of patiently waiting for crowd capitulation to take effect. Yep. So yeah, super useful. Thanks for sharing that. I'll have a few other things throughout this call where I'll definitely love your opinion. But yeah, on the social side, it is starting to look like at or close to max panic, and that's the important thing to remember. So my screen should be sharing once again, correct?
Yes.
Max for Maxime, perfect.
Well,
okay.
I see here.
Yep. So why don't we look at a few on-chain metrics here now that we've looked at weighted sentiment and mentions of buy the dip. I've got circulation here pulled up. First off, we'll show how it looks on Sandbase. This light purple line is the 7-day social trend, something I try to stay in close tune with to see how things are looking. So far, it's kind of just continued to stay flat. And that's actually not the worst thing. Usually if price is going down and the circulation, the amount of unique tokens moving within the BTC network is staying flat, that can actually be a moderately bullish divergence because it means that circulation isn't dropping with price. So with that, it is starting to look a little better, and our NVT model can confirm this. This is our price versus NVT over the past, give or take, 5 years or so of data. And when things are green, things tend to go up in terms of price. When things are red, things tend to go down. It is not perfect by any means, but it's a good macro view of how markets are looking. After 3 months between October, November, and December, where the price peaked in mid-November, obviously, and then fell despite circulation being still in the green, we're now back in the semi-bearish range, meaning that overall, where market cap is right now, we aren't quite seeing a justifiable amount of circulation. It was in the red here just a few days ago, but like I said, due to circulation staying flat where it is while prices dropped below 40K, that's left us in the orange instead of the red. So a little better than it looked about a week ago when it was pretty clear that we were really struggling to get enough circulation at the market cap levels that we were at. So that being said, the last few days here, as you can see by these 1, 2, and 3 day hash marks, are looking better. And if this keeps up, we're going to start looking to be around neutral, which would be the sign that things are finally coming to a rest. As you can see historically, when we're in neutral yellow range, this is often the sign of a turnaround. And we'll be looking for that pretty closely here over the next week to go along with the social metrics that are indicating capitulation. So keep that in mind for circulation. And going back to our other big on-chain metric, daily active addresses, it's a pretty similar picture. If I add the 30-day moving average here, as we can see by this pink line, it is slowly going down on the long-term scale, but nothing significant. I like to look at kind of a 1-year sample for daily active addresses. And overall, it's not in a serious decline. You can see that this back in May through July, that was the serious decline that was really concerning. But now we're kind of fading a little bit, but not to a serious degree. Obviously, we're still not near where we were at a year ago when we were consistently getting, 1.10 to 1.15 million daily active addresses per day. Now it's more like 920 to 935, maybe even 910 to 935K daily active addresses per day. And that's That's not quite what we're looking for. That being said, price is fading a lot more than daily active addresses are fading. So a little bit of a sign of hope there that we aren't falling off a cliff the way we were back in May through July. So daily active addresses looking about the same as circulation, maybe slightly worse because it is fading a little bit more. But on-chain is looking, I would call it semi-bearish overall when combining those two metrics. Now, probably one of the most important metrics that we can look at right now, besides whale activity, which will come after this, would be the 30-day MVRV. For those who aren't familiar with MVRV, it is essentially the average trading returns for those who started their investments 30 days ago. So through all the FOMO and FUD, buys and sells that are happening as traders react to all of the market fluctuations, this is showing the raw percentage return that they are at right now. And typically, when they are below 0%, that means that you buying into Bitcoin would be a less risky proposition than usual. If it is above 0%, it is a more risky proposition than usual. Right now, as you would expect after one of the largest drops that we've had in the past couple of years, we are in negative territory, which is a good thing, meaning others are in a lot of pain right now. And when traders are in pain, there is historically some event to get the MVRV back up to 0%, which is where this metric always averages. That being said, it's not quite below this negative 15% line, which would be like that true opportunity zone. It doesn't always drop all the way below it though. And essentially the way to look at it is the closer you are to the negative 15% zone, the better bet it is, or the higher probability you're in that there can be a turnaround and you will profit. Alternatively, if we were above here, or the closer we are to this plus 15%, the more dicey of an opportunity it is to profit. So right now we're at about negative 12.5%, which is, 3/4 or 80% of the way to that opportunity zone. And that's pretty good to see. It means that you buying into other traders' pain right now can work out pretty well for you. That being said, don't expect it to immediately turn around. We could easily get into a big anomaly situation like we saw in late May here, where the MVRV got as low as about negative 26, negative 27% or so. But that doesn't happen often. And if you're sitting and just waiting for that, you might be a little out of luck. So keep in mind, if you're into something like dollar cost averaging, it could be like if you have, let's say $100 you want to use to buy into the markets right now, dipping in a little of that $100 over time instead of just waiting for something like this and then dumping in that 100 all at once to try to buy the dip perfectly. That's usually not as reliable of a strategy as kind of gradually putting in some of your investment that you want to make. So that's obviously not investment advice, but historically a better strategy that ultimately leads to good results. The other thing we can look at for MVRV would be our Sandsheets model here, which indicates how close we are to that opportunity zone when combining 6 different MVRV time ranges. We use the 1-day, 7-day, 30-day, 90-day, 180-day, and 365-day MVRV, blend them all together to look at the averages of how close each time frame is to that opportunity or danger zone. And as you would expect after a very bad week in terms of prices retracing, we are in very close to this dashed green line that would indicate an opportunity zone for almost every asset out there, at least in terms of the 30 to 40 or so that we have on this model. There are a few exceptions. I know Binance Coin, this I think is a fluke. There's just some weirdness with the 1-day MVRV. And I don't know so much about Unised Leo, but it might or might not be a fluke. That being said, most of these are looking like pretty good opportunities right now. This, of course, would be Bitcoin, a little over 3/4 of the way to this dashed line, which indicates that we are close to capitulation for a lot of trading time frames, no matter when, whether it's 1 day, 7 day, 30 day, 90, 180, or 365. Universally, all of these time frames are in pain now for Bitcoin, and that's why it's getting close to that dash line. And if it gets above, that's historically one of the best opportunities to buy. Ethereum, for those wondering, is over here at about 0.81. Several are above that dash line, as you'd expect with altcoins getting absolutely slaughtered this past week. 1 inch is above the dash line. Aave, AMP, Chainlink almost, Compound, Loopring. Loopring is way in pain. As we saw on the screener here, it dropped 35% over the past week. So you can see why that one is particularly looking like a good underbought metric at this moment, or asset at this moment. Maker is in that zone. OMG Network, Ren, the Graph, Uniswap, and Wi-Fi. If I were to extend this to, another 100 ERC20s, there would be a whole lot more that would be in this underbought zone here. So seeing this much green is quite shocking, honestly. I mean, not shocking, it makes sense, but we haven't seen anything like this in quite some time. And keep in mind, with this much pain going on, this much green makes sense, and it's something to really keep an eye on and take note of if you're looking for an opportunity to buy in. This looks to be a better time than average according to our MVRV metric. Max, anything you want to add on the MVRV end?
Not on MVRV, no.
Okay. All right. Well, the next thing I want to look at is whale activity. Obviously, this is a big one because this is indicative of just how interested the key stakeholders are in accumulating more BTC during this dip. And you can see throughout this retrace since the all-time high, it's mostly been a dump fest in terms of those with 100 to 10,000 Bitcoin in their addresses. We started, let's see, at the peak back on October 25th, they were holding about 49.5% of the supply, and they got as low as 48.5%. So they dropped just about 1% of the supply, which is a ton. I'm going to switch it to absolute values. So we were just looking at percentages. All you have to do is go to the supply distribution metric, click on absolute. I tend to look at the 100 to 10,000 tier as that largest tier that really do a lot of retail trading and aren't full of exchange addresses. And this indicates, obviously it's going to be about the same in terms of how the graph fluctuates, but this indicates that they were holding 9.32 million and got as low as 9.17 million. So give or take, they dumped about 150,000 Bitcoin over that month and a half before starting to accumulate raw Bitcoin back on January 9th. And look at the jump that just started occurring over the last 4 days or so. They were at 9.17 million back on the 16th. And as of today, it looks like they're up to 9.24. So we're talking about 70,000 more Bitcoin going into these wallets, indicating that key stakeholders are starting to have some confidence here. They believe the price has gone low enough to justify them scooping up more since they started dumping about 2 weeks before the all-time high occurred of 68.7 back in mid-November. Max, anything you'd like to say about whales and what's going on here?
I always I like this metric a lot. Yeah, and this one, or actually most of it I'm using, it's also not direct call to action. They try to reveal the underlying tendencies or trends. It's very visible back in May, how they started to accumulate 22nd of May till maybe middle of July. You can see price was still pushing down and they kept accumulating. There was one moment spike down, they also spiked a little bit, but still you can recognize clearly trend up. And this is fascinating in the sense that it's story, well, I personally know from my past and other experiences that there are speculators and there are the long-term holders, and they're always comfortably buying late stages into falling prices, holding it. And generally, they're much more profitable. And the speculators always wrong and got off guard on tops and bottoms. And I know it from like other classic finances. And here, just having this data revealing, it's very interesting to see. And you need to understand the story behind. Yeah, there's also like human soul. They do have emotions, and they always buy too early. Yeah, like many of us, we also buy the dip, which is not a final dip, but they're comfortable with this. Yeah? And here we seen the same. Like what happened just a week ago, they started increasing again. Yeah, what they consider to be maybe bottom, but they didn't give up. The last dumps again increasing. And we're very, very close. If you look into carefully, there is a kind of downtrend channel, both in the price and in the balances. If you draw two parallel lines, you will see it. And we, as it is now, as it broke up, and just 1 or 2 days more, and if this continues, it will reflect on the price. Just we need to wait maybe 2-3 more days. Well, normally Monday, because this kind of players, they also don't do much on weekends. And that's all only us, retail or advanced retailers, very active every day. They're probably not. And there's also a fascinating part to understand the story behind. And just look at this only metric. If you know how big players usually behave, yeah, you can read a lot. Not everything, of course, but quite a lot. So thanks for bringing up. I actually did not look into it like a few days already. I was more like with social metrics, but yeah, they increased substantially.
It's quite interesting, you know. Usually when we see a spike of this magnitude, there's a price jump shortly afterwards, and if things continue to drop off, like we saw, you know, from mid-May to July, it would likely indicate that whales are continuing to accumulate. Because once we see a big jump like this in such a short period of time, it pretty much is indicative enough that whales are clearly watching and they're trying to accumulate at this point. It's not like they're just, you know, accumulating a ton now and then the price drops and then they're just going to dump it all back. This is kind of them drawing the line in the sand and saying, okay, we're low enough where it's grabbed my interest now. Would you agree?
Yeah. And also, as we are on this, I wanted to share for short time, and then you can continue, or you will switch to another coins. Just here, you can see the screen.
Yes, looks like you just got
this
it.
Is exactly this is what I mean. We can, well, we believe we find out how to spot buy the dip behavior or approach, also based on chain data. What we do here, we take two most used stable coins. One is completely decentralized DAI, like this one, and another is Theta, the biggest one, the one stable coin. And we had an assumption that it's moved a lot to exchanges, and metrics here is like circulation and move to exchange inflow. Yeah. So circulation, how frequently on a daily basis, or how many USDT are moving on in this case, Ethereum blockchain or DAI, like on the second chart. And then how much of it you can see moves into the exchanges. So we see big potential here. And a typical, well, it's very few interesting things. First, of course, you see that on the top, everyone believed, okay, now it's 100K. The next stop, a lot of stable coins move to exchanges just to accumulate. Well, they were wrong. But the story about buying the dip, you can also see this strong buying pressure, yeah, somewhere here, like somewhere in this area, yeah. And then it went lower and lower and lower. Now it's very low. Like there is literally, it's lower than usual. Yeah, data moving to exchanges. So there is no buying the dip pressure anymore based on data. DAI is similar, or even if we take a shorter time frame, you will see it's even stronger behavior. Obvious spikes, and they're exactly coming like on the bottoms or close to bottoms where people believe this is a bottom. And now again, we decreased dramatically compared to what's been just 1 month ago. Yeah, this is where everyone believed I'm buying the dip, so I move my stables to exchanges, I converted. Now almost no one is doing it. And that's to be used together with social search we're doing, buy about dip or dips. And this metric, and this gives quite a good overview, in my opinion, for the whole market in general, crypto market in general. And then, of course, once we know the crypto market in general, we can decide, look into alts who could outperform whom. But as long as we're not really bottom where we could be now, everything goes down. So it doesn't really matter. So this is what I want to show as we try to bring some on-chain data also to actually social topic. But at the end of the day, it's all analyzing the non-professional, professional, and others key participants of the market. What is it doing? What they're feeling? What they're expecting? And this piece of data is also a big part.
Yeah, really interesting looking at how stable coins are impacting the markets too. It's a really good point that Max brings up about how inflows of things like DAI or Tether coming into exchanges really indicates just how much interest traders have in actually buying this dip, and whether they are moving those tokens that are intended to purchase more crypto onto exchanges. Clearly the answer is kind of right now, but not nearly to the extent we saw in mid-December when we saw those huge inflow spikes. So right now, it appears that people are showing short signs of bringing in some funding for the purpose of buying crypto, but not nearly to the extent that we'd want to see just yet. Love it. Yeah, let's hear some altcoins, and we'll look at a few. We're looking for some altcoin suggestions that we can show off their metrics on stream here to give some answers as to what their market health is looking like right now. So anyone who'd like to drop your questions on certain assets, we would love to help answer. If they're ERC20s, that's a nice bonus because we have a very long, extensive list of metrics we can look at. If they're not ERC20s, we'll have a little more of a limitation on what we can show. Another one I can show off in the meantime, guys, is average funding rate. This would be the ratio between longs and shorts going on exchanges. This one here is showing Bitcoin and averaging the funding rate between, I don't know why I'm forgetting the first one. It's got Binance, FTX, DYDX, and what's the other one? I got to remember, I'm going to go crazy. BitMEX. So between those four, this is the average funding rate over the last 6 months that we've seen. And you can see it kind of works like MVRV, where when you see these big spikes and everyone is putting in their leveraged longs, that's a top indicator. And when everyone's putting in their leveraged shorts, that's the bottom indicator. You can clearly see the biggest one happen in mid to late September, where the average funding rate was negative 0.000294. We got to as low as negative 0.000154 about a week ago. And we kind of went back to neutral here before dropping back into a legitimate negative range once again. So it means that a lot of people are expecting Bitcoin's price to continue to plummet at this point, and they're trying to ride the wave down. And with that, it's a better time than average to go against the general consensus that it's time to short right now. So all things considered, this is looking like a decently good time to kind of go against the trend here because the trend is so negative, but it's not in a serious extreme point like we would see, back in early December or in late July. Look at how many liquidations happened here in late July, simply with so many shorts going on. And of course, even this short stretch here over the span of 2-3 days in early December, this was a lot of liquidated assets just on this ride going from 48.2 up to 51.7-ish or so. So that's a little bit on funding rate. And I can tell you that there are a lot of altcoins that are looking well into short range right now. There's around half of the top 100 assets that we have funding rate data on look to be well in the short range right now. How are we looking, Max? Okay, I'll give it a little more time. Let's see. Active addresses versus price. So this is interesting. This is kind of a similar look to what we looked at just in terms of the raw amount of active addresses. But what this does is it'll actually show the divergence between active addresses and the overall price. And with this drop down, like I said, with active addresses kind of staying flat in the recent month or so, we're actually seeing the highest spike in divergence since all the way back in late July. And the last time we were in that spot, look at how the price from right here jumped up, eventually going all the way to 52.4 at the time, and the price jumped about 40%. That isn't to say the exact same thing is going to happen this time around, but all things considered, when you start to see a spike of this magnitude, it generally leads to some relief to bring that divergence back down a little bit. However, looking at the long term for this metric, it can be deceiving because just in the last year, we saw a ratio of something like 12, even 16 back close to a year ago, and we're not anywhere near that right now. So it's not always a perfect science, but we do like to look at how the divergence is looking relative to the very recent weeks going on, and recent weeks have not looked nearly this promising. So all things considered, it's looking pretty good on the active address versus price divergence right now. I'll just show one more thing. Mean dollar invested age is continuing to show a lot of dormancy. Not a lot of coins and investments that have been sitting in one spot for a while are moving right now. So that's a bit of a concern. If we look at like the long term, say the last 7 years, look at these waves here. We'll let price load and look at how when the mean dollar invested age starts to drop, that's when bull runs typically begin to occur. When they start to flatten out and go up, that's when bear markets begin to occur. And the most recent big drop happened in late October of 2020, where the price just beginning at where it was flattening out here on October 13th-ish or so, the price eventually jumped 450%. So obviously, we want to be looking for any sign of flattening out right now that would indicate that the dormant investments in Bitcoin are starting to really legitimately be moved in large quantities. Right now, not really the case, but we continue to monitor this week in and week out to see when there might be an indication of this. Social volume and dominance is another thing we can look at here. The mentions of Bitcoin right now haven't quite gotten back to where they were in May 2021. This was really the first big drop off we had seen for about a year after Black Thursday had occurred, and a lot of people were talking about it back here. And again, people were starting to talk about Bitcoin a lot. This was a week or two after the all-time high occurred, and people were wondering if this was the big dip to buy. Of course, in hindsight, it was not. But social volume is starting to pick up for Bitcoin. That being said, if we just look at social dominance, which is the percentage of discussions related to Bitcoin versus the other top 100 or so market cap assets, the discussions related to Bitcoin are abysmally low, surprisingly so. Historically, if we look at the last 7 years, this is clearly the lowest level of Bitcoin discussion that we've seen. So it means that there's still a ton of interest relating to altcoins, and not a lot of attention is being paid to the number one asset that is allowing all of those altcoins to thrive. So that would be kind of a red flag right now. It is starting to pick up a little bit. I'll zoom in here so you can see how it looks relatively. So it's starting to pick up. You know, I'll do like we'll just do a long 200 candle moving average. And we can see that it's gradually started to move up a little bit, but nothing really significant yet that has caused the crowd to shift their attention back to Bitcoin. And that's something to really look out for, because we want to see people talking about Bitcoin a little bit more, indicating that there's interest in putting their money into the number one market cap asset instead of, you know, meme coins and NFT coins and a lot of the things that might individually pump up some altcoins, but won't pump up the crypto market. You have any results coming in yet, Balraj?
Yes, 1 second. Refreshing results. Number 1 is Olympus Ohm. Close second is Hex.
Olympus. Okay, so this is an ERC20, which is fantastic. So we've got plenty of data on it. Let's take a look at what we're dealing with right now. We'll zoom into the last 6 months, beginning with circulation. We saw some huge spikes in mid-December. It looked like that was the last time we had like a big bounce, which is interesting. So it does look like there's some evidence that a big circulation spike leads to a price jump in this case. However, it hasn't really shown anything significant. We have seen a few little bumps here. Obviously, these two candles are kind of dwarfing the axis, but if I zoom into just the last month, we can see that we had a few big spikes here on December 20th that led to a rise, followed by a pretty sustained lull in price as it's faded from 464 all the way down to where it is now at 94.90. So that's give or take about an 80% price drop over that time. And we've seen a few interesting jumps in circulation, nothing hugely significant, but overall on-chain wise, it isn't looking like there's extreme activity going on. Daily active addresses isn't even looking as good as circulation. It's mostly just been a continued downtrend in daily active addresses. So that's not great to see there. MVRV is always interesting. I'll do the last 6 months here. Okay, it looks like this is a very, at least on the MVRV side, we haven't had many pieces of data until just last week. So we're only looking at about 8 days of data for MVRV, but that still gives us an indication that we're in negative territory right now. I would take the actual number of negative 181% with a grain of salt. I would imagine that's because we only have about 8 or 9 days of calculation right now. But it is definitely in the negative range, and we can clearly tell by just seeing just how much the price has dropped. Whether it's in an opportunity zone is tough to really decipher, but it probably is based on this. So it's clearly a better time than average to begin your investment in OHM if you are looking to buy right now. That being said, it's going to be connected to Bitcoin and other assets that OHM typically fluctuates along with. Social dominance, we're not really seeing anything too significant here. It looks like the percentage of discussion related to OHM really peaked back on January 16th. Really big peak for a small asset. I'm not quite sure what the event is that caused that. I would imagine it had something to do with the price really dropping off a cliff here. But OHM right now is pretty much back to usual and not being discussed much. We would want to see probably a little bit of a spike, which would indicate that there's going to be some relief. The last time we saw a group of spikes was in early January, about 3 weeks ago. And when that happened, we had one of our few rises, not a significant rise, but it was at least, it looked like about a 7% gain during the time when it was being talked about a lot. And similarly, we did see a very short relief after it was being discussed a lot here in just the 16th to 17th, where the price jumped 23%. So that was pretty significant. But all things considered, not much going on the social end for OHM. Mean dollar invested age, nothing significant, just a lot of
Brian, if I may suggest, because I was analyzing OM2,
yeah,
we're discussing it in our group. Things I personally pay attention to the SH consumed and the elective address is 24 hours. That we were waiting when the crowd will panic, and it happened around $100, I think, once it gets. And actually, almost very cool case. As someone mentioned in the chart, it's correct. It's a kind of rebase. It's a rebase based on the treasury. So in a long time, it was like too high priced compared to the treasury, like really ridiculously high. And or what is liquidity owned protocol owned liquidity. And no one was seemingly concerned with anything on the market and didn't move their own because whatever is they believe it still would be very cool to keep it. Now you see the spikes, yeah, which happened recently. Now this is the moment they got concerned. And now if you plot on it, the elective address is 24 hours. Mm-hmm. And maybe take not the complete time frame, but just exclude this huge spike on the left side.
Sure. Because zoom in here.
Yeah. Yes. This is now you see the elective addresses, nothing. Yeah. So the first sign of concerns here is this age consumed. It means all tokens which haven't been moved for a long time now are being moved, and supposedly some of them sold at that time precisely at the bottom. Now, if you increase even more to take this area from this huge spike, and on the right, we will look into the elective address. You will see that it was almost dead. No one moved. Whoever wanted to exit. The others say, okay, we'll keep it. Now, you see this on this chart, it's sizable increase in the elective addresses. Yeah. What was the lowest value? I don't see that.
Lowest value here. It looks like it got down.
On the left. No, right here? Not completely. No. In 15th of January, I think it is.
15th of January.
No, so we're looking at... No, a little bit to the left. I mean, lowest daily active address.
Oh, got it. Lowest daily active address. So it got down to about 105.
105.
Actually, 99.
Super low. Yeah, it's extremely low value. Yeah, like for this kind of valuation. And then it's increased. Now this increase is possibly last activity or those who are panicking. Now we are in a session where I personally, okay, not investment advice, but the setup looks good enough for my eye. We had one spike on age consumed where people did panic, where if you show these huge spikes. Yeah, and after this we had another crash of the price. Well, there was a drama, yeah, behind them, and the network still on that activity considered to be almost like a dead. where on fundamental level, I know they're doing quite cool things. They're not the only ones. It was copied many times, but still, it's the same like Uniswap, SushiSwap, PancakeSwap. Uniswap is still there and still the best. Here, my personal opinion would be they're still good and they will find a way out. And under all consideration, risk reward is good now for OM. And I base it on two metrics: network activity. Yeah. It spiked a lot and then it died. So it means whoever wanted to give up, they give up. The others, they will hold it for whatever price can go. The only thing you might consider, you can enter now, or you can enter later. With this behavior pattern, once it increases price 20, 30%, or even 50%, there will be a lot of sell pressure. So you will have a second chance. Now, all of
Max, would there be anything here that would indicate that there is a sign of a turnaround, or would we kind of just have to speculate based on?
Not yet. Oh, no. On this chart itself, nothing. But if you apply typical behavior of holders, then you say, okay, there were one-time capitulation with age consumed, another time capitulation. Now they don't do anything. It looks good enough. It looks good enough to my eye. But those who did not capitulate now, they will definitely sell once the market recovers. So you will have a second chance. No worries. It will move. Don't FOMO. It can move 50% up, but then it will go down like at least 60% again down. Yeah, I've seen this many times. And so Olympus, not the first, not the last one. But if you like taking risk, okay, current levels are good enough.
Yeah, I'm checking the supply distribution now to see if there are any kind of retail whales that would be showing signs of accumulation. And it doesn't look like it. This is a very centralized coin. So about 96.5% of all coins are held by million to 10 million coin addresses. So it's really difficult with such a high proportion dedicated to those mega large addresses to decipher how those tiers right below it are behaving. It does appear, the 1,000 to 10,000 tier is showing very, very mild signs. It owns about 1.81% after being at zero. So there weren't any addresses before the 16th. And the tier below that, the yellow line, they dropped off a lot. So they were at 2.5, halved their supply held, and are now accumulating just slightly, but nothing really of significance to show here. If we do see a big spike in like the yellow or blue lines, anywhere between 10,000 to 1 million, that would be a pretty good sign. We saw, it looks like here, like for example, let me take out all the other ones. So like this 10,000 to 100,000 line, they had a big spike here, and then the price did rise. So there's a little bit of alpha you can look at, but they very quickly took profit as soon as there was a little bit of a baby rise here. And it doesn't look like there's really anything significant to look at right now because it's really dropped off a cliff. So OHM is looking interesting. Thank you to whoever suggested this asset. I haven't really looked at this one before, but Olympus is always an interesting asset that I can look at and do some analysis on.
And it's so interesting things they're doing. I mean, not without a reason it was copied, forked so many times. I mean, it was one of the most interesting development of DeFi protocols, where protocols own the liquidity. And it's been implemented now in different shapes many times. Yep.
Yeah, I'm just checking when it originated. It's been around a while. It looks like 20. Oh, no, not a while. It's really only been around since
No.
May.
It's less than a year.
Yeah. So it's a very recent coin. That's why I haven't heard of it.
Yes.
But no, super interesting. I'm gonna keep a close eye. And if there's an anomaly that occurs in the metrics, we'll try to get a social post out about it and keep you guys informed. Balresh, how are we looking in terms of one more altcoin? Oh, I heard Hex. Should we look at Hex, or is there anything else that might have surpassed it.
Indeed,
No,
Hex
Hex
someone
is still sharing first place with Ohm, so Hex is the way to go.
Okay, let's take it. I also
Let's
didn't
take a
actually. I didn't look into a Hex also for at least a few weeks.
Yeah, Hex is always
What happened here?
Yeah, very interesting drop off in circulation. This is the last 3 years, so this is a macro view.
Possible they move to another smart contract just to make sure.
I don't know myself. It's hard to say. You know, just for consistency purposes, why don't we look at just how things have looked since the big shift in circulation? This is one asset where we just see an absolutely massive amount of tokens circulating all of a sudden, which dwarfs everything else. You know, the last big spike occurred on August 2nd, and there was 98.2 billion Hex tokens moved. If we zoom in just after that spike, okay, that's we finally have a view that isn't showing just absolutely dwarfed amount of circulation because of one spike. The last time we saw some major circulation moved was on January 9th, and there's been kind of a drop off ever since. We saw, it looks like a lot of these circulation spikes happen in tandem with tops, one top here, one top shortly after here, and then one further top here. This was our latest, but it didn't really do anything or move the needle. So circulation-wise, it looks like things are relatively flat and actually rose up quite a bit on the 7-day trend and are now dropping back down once again. So on-chain, not much to really say. If we look at daily active addresses, kind of a similar story. It tends to spike around tops. Big spike here on the 29th, big spike here on the 9th, big spike here on September 8th, right before the big top here. And we did have a cluster at the bottom. So daily active addresses is actually a pretty good metric to look at in terms of identifying at least temporary price shifts. And right now it's looking pretty dormant here for the last 10, 11 days or so. On-chain wise, not much to really say right now then. Age consumed, we haven't seen any major spikes since the 9th or so. So these are all kind of showing the same between age consumed active addresses and circulation. Let's take a look at MVRV. Do we have MVRV if we take off intraday? We do. Okay, so we have the daily MVRV that we can look at here. I'll go back a little ways to the last year. So this is the negative 15% line that I'm drawing here. And this is the positive. Yeah, we're in kind of an opportunity zone for Hex, at least according to the 30-day zone. It doesn't necessarily have to go all the way.
For Hex, as many other alts, I would always wait for a bit deeper values, like 20, 30%. It's like for Ethereum, Bitcoin, it's not easy to get so deep. Right. There is too much demand. And with other speculative assets, because you're taking higher risk, it's better not to better miss opportunities than to experience too much risk. So for even though Hex quite highly related, but it's still super volatile, I would wait more, like 25, 30. Yeah.
Gotcha. So I marked the negative 25% line as well. We're in between the negative 15 and negative 25. So obviously with it being below 0%, well below 0%, it's in a better spot than average if you were to add to your position or open a position in Hex now. It's not quite in that opportunity zone for Hex that we've seen in early December or in late October, mid-October, all the way to early November. Those were the times when we were really seeing clear signs that a buy would be justifiable here. So Mr. Richard Hart's coin is looking to be in a pretty good spot if you have the cojones, if you will, to purchase right here, according to average returns. We saw a clear sign that it would be a good time to profit right around the holidays, right before Christmas, where the MVRV got as high as plus 56%. So that would be a good range to maybe even plus 50% looks like around the range where profit taking is very justifiable. You can see it just got above there on the 21st. Historically, over the last year or so, there have been 1, 2, 3, 4, 5 times or so where it's been at plus 50% or above. So that would be a really extreme time where if it's above there, that would indicate you can take some profit and be pretty comfortable with it. Anything else on Hex? Let's see. Active addresses. Weighted sentiment.
Well, sentiment, I'm not sure. I don't think we have enough social volume. We can check it out, but don't pay too much. I mean,
yeah, so it's small sample. I agree.
Yeah, but what about the Twitter followership? We can see weekly increase.
Yeah, that's a good one.
Sometimes, yeah, sometimes for hype tokens, it's always interesting to see. 7 days.
Let's look at
24 days. 24 hours might be also interesting.
We'll just do both. 24 and 7. So this is the last year of Hex's Twitter followers. And I'll draw a negative line here by going filled area and filled area. So Twitter followers looks like it's continuing upwards. This is the amount of added Twitter followers per day, not just their overall amount of Twitter followers for those who are confused. We got a huge amount of Twitter followers right at the top, which is very interesting. This is actually a really nice top indicator. I'm glad Maxim pointed it out. The most Twitter followers that it had in the fall was on September 9th, right before its local top, before jumping one more wave up. But overall, looking at the past year, it's on a steady rise as far as daily Twitter followers. On weekly Twitter followers, pretty much same boat. It's looking pretty good. Let's take a look at like the last 4 or 5 years just to see. So this is the daily Twitter followers over the last 5 years. And it's still on a pretty steady rise. It's dropped down a little bit, but what do you think here, Max? I think it's a good sign that Hex is still getting quite a bit of a following on their socials.
Definitely.
Yeah.
It's, the projects are made by the social hype around it. And they're doing good. I don't know. I didn't follow up what is the latest story he's selling or developing, but seems to be doing well. Maybe because we're in general in crypto on the hype level, so anything could sell. But this looks good. I expect it to be worse. It looks quite good.
Yeah, it appears that
need to read what is the story now. Why people like it so much.
It's had one hell of a ride. I mean, it's up 76,000% over the last 5 years here. That's not typical for an asset.
Yeah, maybe this by itself but if we look as contrarians for buying levels, it will be area or level where there is a lack or low social attention. It means less people come into Twitter, less social volume, ideally also less network activity. Yeah? This is where less and maybe network activity, like the electrified is 24 hours diverging, like growing into the falling price, but on a lower level. This is kind of ideal setup, yeah? And you pick up as many metrics as you want, what is for your risk or desire to play this game. And I see that it's going down at least this for 24 hours. So it's actually, if it goes negative, it means there are some outflows, unsubscribe, so it can be a good one. You always want to play that everyone is looking to it. No, people don't look into it. And we are close to it.
Mm-hmm. So overall on Hex, it's still getting a nice uptick in its dedicated following on the socials. On-chain wise, not much seems to be happening. MVRV, it looks to be in a pretty good range, not quite in a universally good range, but overall a much better range than average, as a lot of altcoins look right now with so much blood in the streets happening. And then supply distribution really quick, just to see if we can find anything of use here. Let's start from the very top. So obviously it's an extremely centralized asset. 99.3% of coins are being held by 10 million or more coin addresses, and the price is at 19 cents. So that's still quite a bit of money. We're looking at give or take, that would be $2 million or more. So addresses with $2 million or more hold 99.3% of all coins for Hex. So extremely centralized. The 1 million tier looks to be dropping. So if I go just the last year here to give it a little better of a scale, yeah, it's back to dropping a little bit, but it was accumulating here quite a bit. To say there's much correlation though, it would be false. It doesn't look like there really is. They started taking a lot of profit in mid-July, and from mid-July to mid-October, those 3 months, the price went up a ton, despite the drop-off from those 200K to 2 million K USD holders in Hex. So not really much significance I'm seeing unless we look at the 10 million one. Just checking to see if we can draw any correlations here. I guess you can say a little bit. I mean, they started accumulating in mid-July themselves. They topped out, give or take, right around here. So the accumulation from mid-July to late September, the price went up about 249%. And then when they started dumping, let's say they got to a bottom right here, the price actually went down about 19%. So if you are going to look at supply distribution, the 10 million to infinity tier that holds almost all of the supply does have a bit of alpha, and it does appear that they're accumulating here. Once again, they've added about 0.14% of the supply back to their stack, which is a lot considering there isn't much supply being held by any other tier anyways. And the price is continuing to drop, which of course would be correlated with how all of the markets are doing right now. So take that with a grain of salt. So if we really start to see this line continue to jump up, that could be pretty promising that there is going to be some turnaround once the markets level out. Cool. So we're about 12 minutes after the hour. I think this is a good time for us to conclude, but hopefully this was helpful, guys. I appreciate the suggestions of OHM and Hex. They're certainly two very unique assets that don't follow the typical linear path that a lot of other altcoins follow. But we saw some good metric points on Bitcoin today. We didn't really touch on Ethereum, but we'll definitely do so next week. The markets are crazy right now. This is the most we've really dropped for a sustained period since Black Thursday, going on over 2 months now, 2 weeks. Yeah, 2 months and 2 weeks now of a continued drop is not something we've really seen in quite some time, maybe since 2019, other than like the sudden drop off that happened on Black Thursday. So there's definitely some impatience and blood in the streets and pain and people deciding that crypto is never going to go up again. And that's what you want to look for as a sign of a turnaround, where the whales will start to really scoop up other people's weak-handed drop-offs. And I think it's looking pretty promising, Max. What do you think?
Yeah.
Better sign than usual. We'll leave it at that. And if we're looking at those 3 waves on the social side, we're in the 3rd wave now, and now we're just waiting for it to conclude. So near the bottom looks to be where we're at least based on historical objective data evidence. Obviously not investment advice. We can't predict the markets just like you can.
Yeah, exactly. It's just we try to do our best, but it's still at the end of the game. It's a game with no 100% bulletproof algorithm.
It's all probability, and the probability is looking better than usual, and we'll leave it at that. So guys, stay safe with your investments. If you are trying to make some extreme moves, just be careful, because it's still going to be extremely volatile, whether things jump up or jump down because of how polarizing prices are right now. So keep that in mind. don't forget about your referral links that you can use to spread the love and share the information that we have with friends and family. You get 25 to 35% of that first month of purchase should any referrals come from your link. And yeah, we'll leave it at that. And we hope you guys stay warm and safe and healthy with Omicron continuing to be a very scary presence in this world. And yeah, look for more social posts coming soon on the markets going into this weekend. And we will talk to you next week on our next This Week in Crypto.
Yeah, thank you, Brian. And thanks everyone for participating.
Thanks, everybody.
Mm-hmm.